Welcome to the Connected Enterprise Podcast. This is Carl Lewis, your guest from Vision33. And my guest today is Maria Tringali from Avalara. Maria, welcome. And please tell everybody about Avalara, what it does for your customers, and tell us what you do at Avalara.
I'd be happy to. Hi, Carl. Thanks so much for having me today. Delighted to be here. And of course, always delighted to talk about sales tax compliance. A little bit about Avalara. We've been in business for 14 years. We're a global company that helps to automate sales tax compliance across any type of business, from the very smallest business to the largest business, even to those folks like we're going to be talking about today that do not charge a lot of sales tax, but everyone still has sales tax compliance. And we do that through a delivery of integrations, pre-built integrations. Of course, we have them specifically for the products that we're talking about today for our SAP B1 clients, but we have integrations with all kinds of invoicing platforms. That's really our specialty. And myself, I've been here for 7 years now, and I'm a senior solutions consultant, fancy title for. That means I work with our customers, our salespeople, and our partners like Vision33 to help educate them mostly on the importance of tax compliance, again, when you don't have a lot of actual sales tax, and how to stay compliant in that type of industry and make sure that you won't get in an audit scenario and you're not wasting time with your employees, and you provide really, really good customer service even to your exempt buyers.
Always a good thing. You guys, as you kind of alluded to there, you have thousands of customers worldwide.
We do.
So I'm interested in, what Avalara has seen happen as a result of the pandemic over the last 18 months. What's happened to, your manufacturing and distribution companies that you're serving?
That's actually a really good question. It's been quite interesting. So to back up a little bit before that, we had the changes in nexus requirements across the country, economic nexus, which I know you're familiar with, Carl. Yep. That got compounded during the pandemic. In our manufacturing and distribution world, we're very person to person, kind of personal. We have a lot of relationships, and we couldn't go out and see our customers. So it really changed the way we were doing business. And there was a little bit before the pandemic of manufacturers, distributors trying to move more business online, trying to become more efficient. So COVID-19 really accelerated that. So what we're seeing right now is a lot of our customers, large contingent of our prospects and customers that are moving what used to be their sort of in-person B2B business to a more online buy, enabling their business customers to buy in an online mode. So beefing up their online purchase, whether it's wholesale or not wholesale, to an online portal, as well as being super creative and getting into new businesses, new industries, new markets, and adding B2C. So I'm really seeing everybody go this way, Carl, and seeing people do one, the other, or both, right, and B2C online presence with maybe aftermarket parts or certain products. Quick example, I had a customer very, very early on in COVID that's a plastics manufacturer, and they created these dividers for their own break room. They're plastics, they created it for their own break room. And they called up some of their top customers, and they're like, hey, would you guys like to buy these? Our employees are really liking these. Would you guys like to buy them? It turned into a business. So they now are B2C because the business is consuming that, right, instead of, even though it's still manufactured. So we're seeing a lot of things like that where people are going in all directions and just changing their business model. And we just can't get out to see our people in person. So we've got to give them a good online experience.
Yeah, I would say among our customers, probably the number one thing that's occurred over the last year and a half is a lot of e-commerce sites that have either been initiated for the very first time or enhanced dramatically or Correct. Integrated for the first time. But along with that, the reason I really wanted to talk to Avalara is I can see that, all of a sudden, people are doing business globally that they've never done before. All of a sudden, they're selling across North America that they've never done before. They've been very regionalized or localized even.
Correct.
And all of a sudden, all of these tax compliance issues, you don't even think about it. We're just going to put up an e-commerce site and start selling. But then all of a sudden, tax time comes around and you've got a real mess on your hands because you don't know if you are compliant or not. What can Avalara do with a customer that's just gone through this, right? And now they're faced with, what kind of nexus do I have? Where is it? How do I do the reporting? What's available to me?
Yeah, great questions. I think you're right that most of these businesses just don't know what they don't know. In a lot of cases, businesses have never charged retail tax before. Oh my gosh, how do we even know what the tax rates are? How do we know how our products are taxed? And that's where Avalara can come in. So I always say, Carl, a lot of people that I talk to is trip to the doctor is really advised. And that is understanding your nexus footprint. And for those of you who don't know, nexus is the requirement or the responsibility to collect and remit sales tax or collect those exemption certificates in a state based on your business activities. It could be physical presence, and now, of course, it could be economic based too. How much sales do you have into that state? So understanding where you have the requirement to collect and remit today based on the new laws and based on your business changes and moving forward. You got to keep monitoring that. It's not just one picture in time. So Avalara can help you do that. We can help you understand where you might have responsibilities today. And then we can create solutions that help you get it right, that help you calculate the right amount of tax, do a much better job of collecting and managing those certificates. And if you do have to register outside that region, Carl, if you have to register in more states, not only do you have to know the tax rates there, but for most businesses, that means you now have to collect a lot more exemption certificates than you ever have before. And those forms are unfamiliar. And so we want to, again, make that transition really smooth. Someone's been buying from you from, Texas. You didn't have Nexus there, never providing a certificate and always tax-free. Now, all of a sudden, you have to start collecting a certificate or charging them tax. And so Avalara has systems and platforms and services that will help you make that transition smoother. So we can help you collect those certificates, get the tax rates right, and also help you with filing those sales tax returns. Even if they're $0, you still have to report. And that's where people get confused a lot. So to it than that, but kind of a good start.
Yeah, I mean, you're talking about things that, manufacturers, resellers, distributors, all of a sudden they're B2C instead of B2B, or they're B2B online. Are there other things about stepping into e-commerce, if they could go back in time before they started doing it and think about it, that they should have thought about, or, it would have been nice to have thought about?
I think the couple things that I see is, one is that products and services can be taxed differently in different states. A lot of people make assumptions, like if I sell services, installation or something, people make assumptions that things are taxed the same outside of their home state or their home region, and they're not always. So understanding the product taxability is really important. If you do installation, if you do warranties. So if you're just selling tangible property, then you can go with the state rate, but most people have some other products, if only freight, that can have varying taxability from state to state. So realizing that it's not just getting a bunch of rates into your e-commerce platform, but understanding what you sell and how that's taxed before you apply tax to it. The other is in an online scenario, we've got to make purchasing, if we're moving more business online, we've got to give the opportunity for our customers to submit an exemption certificate to us, either on the fly in the shopping cart or in their account, or somehow online and digitally, instead of this back and forth. As we move more of our business to the web, we've got to get out of the paper business. We call it paper to pixels over here. We need to get out of that paper and PDF business and into the digital world. And that's where some people are struggling. And I would also just add one thing is, don't let tax compliance keep you from going online. There are solutions like Avalara. There are people like me, like all of us at Avalara, that can help walk you through, how do you see your business and how are we going to keep you compliant? So don't be afraid. I just talked to a business the other day and they said, we're not sure we want to go online because of the tax ramifications. And you can't do that anymore. You'll be out of business, right? Everybody, if you want to stay relevant, you've got to have an online presence, and you've got to make it easy for your customers and for your employees. Don't forget about your employees. You don't want them to have to jump through extra hoops because you've added new marketplaces. So automation helps both of those, both our customers easier to buy from us, and our employees easier to sell to those businesses.
You talked a little bit about, exempt certificates, and there are businesses for various reasons that are exempt, but hasn't that gotten more complicated with the, starting to do business in multiple states and
absolutely,
and things like that? Can you explain that a little bit?
Yeah. So as I said earlier, the more states you have a presence in as a seller, the more certificates you have to collect and the harder that job can get. Our customers don't necessarily know what to submit. Our employees don't necessarily know what to collect. They don't know if it's a business license. Is this the right form for Missouri? Is this the right form for Texas? So it has gotten much harder. We've had some businesses that have gone from managing, 50, 75 certificates for their home states that now have a presence in many states, 23 states or something. And now they're having to manage thousands, literally thousands of documents. So it has gotten way more complex. It's not something we can just sort of collect and stick in a drawer anymore. And also, if you're selling in more states, you need to be able to verify that you have that certificate on file, the right certificate and an accurate certificate at the time of sale, because now you're open to risk of audit in way more states. As you do business in their state, they want to make sure they're getting everything from you that they think they rightfully deserve. And the ability to manage those certificates has to be done more efficiently than what we've done in the past. We don't have tax experts. I don't know about you, Carl, but the average distributor or SAB1 customer probably doesn't have a tax person. And as I always say, even if you had a tax person, they're not an exemption certificate specialist. I kind of joke around, those people work for us. You just can't, that job doesn't exist. A lot of people say, oh, we'll just go hire someone to do this. Well, that human literally doesn't exist, right? I mean, if they do, they'd probably working on our CertCapture team. So it has definitely got harder. And I think we as in general are not maybe treating it seriously enough. Those exemption certificates are very valuable. If you have a $10,000 order and you didn't charge tax on it and you can't prove that you had the right document on file, you could owe, $800,000, $1,200. You could owe a lot of money out of your pocket of tax not charged because you can't prove why you didn't. So it's riskier too.
Yeah, absolutely. I know that some of the states have this, a requirement for qualifying for Nexus about gross sales. Mm-hmm. Do exempt sales, do they get included in that gross sales figure?
One of our favorite, maybe not our favorite, but one of our common answers here is it depends. In the United States, we let all of our states make their own laws. That's what we do. So some states count all sales, some states count all but not resale, some states count all but not exempt. So really that is determined on a state-by-state basis, which goes back to what I said earlier. That's why a nexus study or sales tax risk assessment, same thing, is really important. So understand how you go to market and how each state would require you to register and collect and remit or not based on your specific business practices. And there are 46 taxing jurisdictions in the United States. So they're not all the same. Some are just all sales and some are don't count exempt at all. So it just really runs the gamut.
I can imagine, some of the small businessmen that I've worked alongside of over the years, hearing this conversation and going, well, I haven't been paying attention to this stuff for the last 25 years. Yeah. I'm just going to keep going and not paying attention to it for the next 25 years. But then all of a sudden somebody calls and says, oh, by the way, we'd like to make an appointment for an audit. What are the implications of not paying attention to this and then being wrapped up in the whole auditing experience?
People really underestimate the pain of an audit until they're in one. I'm in the risk business, right? As you just said, some people just make that decision to take that risk. And what happens is we ultimately get that phone call that, oh, we are under an audit and we didn't have things in as good a shape as we thought we were. And what I find super interesting though, is even if there's a highly exempt business, like a lot of our B1 customers don't charge a lot of retail tax, or they're just breaking into it, as we've talked about. So in their minds, they don't owe a lot to the state, and they fail to take into account the unforeseen costs of an audit, all the time that it takes, all the report running, all the detail. Use tax, don't even get me started on use tax. A lot of our manufacturers have use tax and they just estimate because it's very hard to get use tax right because it's different in different states, and sometimes auditors will focus on that. So even though at the end of the day, maybe you only owed a few $1,000s and it didn't break the bank, even if that's the case, which it usually isn't, even if that's the case, they fail to count up all that time and energy and effort of handling that audit. You took all these people away from their day jobs to go look into all this stuff. And if you're proactive with automation and your tax compliance, if an auditor comes calling, you're able to literally pull this stuff up in minutes and say, here, I have my ducks in a row. Here's how we manage it. Here's my reports. Here's my exemption certificates. And they're in and out of your hair so much faster. So there's a lot of hidden costs, I think. And I see a lot of that. And it frustrates me a little bit that they're just willing to just take that. And then if they really do get you, I'm sure you can imagine in 7 years, I've heard a lot of horror stories where people have been audited for, hundreds of thousands of dollars, because if you can't prove why you didn't charge tax on an order, if you don't have the right paperwork and prove you had it on file the day of that sale, the state wants their money. No ifs, ands, or buts if you can't prove it. And so then you're left on the hook for the money and maybe going back to that customer from a sale 3 years ago, horrible customer experience. Oh, by the way, we didn't charge you tax. Can you pay us now? What do you think they're going to say?
I've worked with a few different ERP systems in my career, and none of them have ever had a menu section that says, in case you get audited. It seems like they generally don't do a really good job at, when the auditor comes in and they want a specific type of report, that doesn't exist, right? And so everything is this longer process when that happens. And I've even had, customers be very frustrated after going through an audit that the ERP system really didn't help them as much as they thought it would, because it just doesn't think like that, right? When it's created.
Yes, I would totally agree. It's funny, I have conversations with people that just think they'll still, once they, Avalara can calculate the tax, but they'll still use the reporting in their ERP to file returns. And you're absolutely right. And that's the same thing in an audit. The ERP has a GL and it has room for like one tax rate. It's not going to give you the breakdown that most states want for filing and for audits. It doesn't happen that way. And so Avalara, with those integrations, you're passing your sales data through the SAP B1 integration, your eCommerce integration, wherever you're creating invoices, you're passing sales data over to us. And we break that data down into the reporting that's needed for filing your sales tax returns, as well as needed for audit. It has so much more detail because it's specifically a tax compliance system. So it breaks down your sales from jurisdiction to rooftop level to exempt sales to whatever you need to slice and dice it for either that return or that audit. All that reporting is right at your fingertips. And you do see totals in your GL on your side because that's what you need to balance, but you don't have to see all that breakdown. In most cases, you can't see all that breakdown. You're pulling information out of your invoicing systems, and then you're using Excel or Access or something to do all this slicing and dicing in order to report. And that's just extra work that with today's technology doesn't really need to happen anymore. You can take your returns filing from literally days, or a week, a month, down to a couple of hours by using automation.
That's awesome. It's been as we have talked about, it's been a really big 18 months for e-commerce. I've heard some people say that it grew sixfold in this year, right? As if it was 6 years all rolled into one. What does Avalara see as the future of e-commerce? What do you think is going to happen?
Well, as I said earlier, I think more people, obviously everyone's in the B2C e-commerce business, right? Because we're all sitting at home ordering stuff. So if you sell B2C and you're not online, you're kind of in trouble.
Yep.
But the bigger thing I see is B2B. What we're seeing is people moving more B2B online, whether that's taxable or not taxable, but we're allowing our big volume customers to actually go online and purchase more stuff instead of calling us or faxing us or waiting for a rep to come out there. I don't think that's going to go back. And if you look at research, Carl, if you look at, we look at this stuff all the time, and you ask an average B2B buyer, they're begging for an easier way to buy. Do I have to fax this order sheet? Do I really have to call you? Can I just go in and click, click, click and place an order? They really want that. So I think that COVID has kind of moved us faster in that direction, given us a little kind of kick, to move in that direction. And I think that B2B online purchase, in part or full, is here to stay and won't go back. We'll still have our salespeople, right? We'll still have our personal connections. We'll still have our trade shows. But I think it's been a big change because I've been in this business since I've been at Avalara, and people have really resisted moving the B2B buy to an online platform. No, we go out, this is how we do it. We take these by hand, we do all these hand things, all these manual things, and moving that online, I think that's going to stay. So to me, I think that's a big change that we'll see. That also means that you have to be compliant across all your channels. That's another thing, Carl, is people are really in omni-channel. Sounds like a fancy word, but once you go online or you have a quoting system, or a lot of businesses have 2 and 3 websites, one for B2C, one for B2B,
Right.
one for distributors, whatever. So you've got to be compliant across all your platforms, where maybe before they only had one, right? Now you've got compliance across all these platforms. So automation is going to help that. So I think that's a struggle, but a struggle that's here to stay. You've got to be able to be compliant and accurate and consistent across everywhere that you make sales. And we're not going to go back to a one platform sale. I mean, do you think? I just don't see that.
No, I don't see that happening. I think people have become comfortable with online sales at every level of business, B2B more so now than ever before. And like you, I think it'll continue to grow. You referenced a term, use tax, and sort of cringed when you said it.
I said cringe again.
Can you give us in 2 or 3 minutes, the short course on what it is and why we should be aware of it?
Yeah. So the hard thing, so let's start with sales tax, right? So we all think sales tax is on our receipt. I purchased something from you, Carl, and you charge me tax on that order based on where it's going. If I'm paying it over the counter or you're sending it to my house, you're charging me the right amount of tax for that order. Use tax is different. So use tax is I'm in business and I buy something, generally not paying tax, or maybe I paid some tax on it, but I provided my exemption certificate. Now roles are reversed. I provide my exemption certificate to my vendor because I don't want to pay tax on most of that order for a couple of reasons. I might be reselling it, but I could also be reselling a lot of it, but using some in my shop. Or I might want to apply the use tax where I go and use that. So it's a very subjective tax, where the what I just described to you is more of a reactive tax. I buy it from you, you charge me tax where it's going, right? That's kind of it's an exchange. Use tax is I buy it and then I don't remit the tax on it until I use it. So it's something that happens after the purchase. And that's way harder to automate and way harder to manage across states. So if you're a big construction company and you do jobs in multiple states and you use product out on those sites, you have to know the use tax laws and the rates of the products and services that were used on that site and how to tax them after purchase. So it's more subjective and it's hard. Ask any of your customers who has to do use tax, has to manage use tax. It's not fun and the rules aren't exactly the same. So automation there is harder, but just as important. It requires a little bit of human intervention, where that repetitive invoice thing, once you know what you're selling, you can just charge tax, which you're familiar with, Carl, right? Our connectors
Very much so.
charge tax. But use tax, a human has to get involved and say, we use 3 hammers on that site and we installed 14 cabinets, right? We have to know what we actually did at that site in order to calculate or recalculate use tax based on how something was used. So it's a much harder thing to do. That's why I always kind of cringe, but it's a necessity and has to be reported. And I will also say that auditors love to look for use tax. Businesses that have a lot of use tax and businesses that have a lot of exemption certificates, because it's unfortunately way too easy to get both of those things wrong. And they're worth way more money than getting a tax rate, but getting use tax for big projects wrong, or not having exemption certificates for $10,000, $50,000 orders and you didn't charge tax. They know that's a lot more money.
Right.
Hanging fruit, right?
Wrapping up things today, what would you say are the 3 big takeaways you want, folks to remember today about tax?
Well, the biggest thing, as I already mentioned, is my trip to the doctor is do a nexus study or a risk assessment. Do it with Avalara or do it with an accountant, a CPA that promised me has a SALT practice, a state and local tax practice, not your regional firm, because they won't be able to cover all of the states. So make sure it's a SALT, they have a SALT division, or do one with Avalara. So understand where it is that your business has a responsibility to collect and remit. Once you understand that, next advice is then let's consider automation, automating part or all of your processes, whatever those are. You need to move into the digital age for tax compliance. It's no longer something that manufacturers and distributors should be doing by hand, with Betty back there. It's just too risk prone and there's just too much compliance. And the other thing, I think the last thing I would leave you with is think about tax compliance across your organization. We think that there's not a cost to it as a business, but the truth is it touches a lot of people. So think about it this way. You've got your credit manager collecting your exemption certificate. You've got your IT guy putting rates in your ERP. You've got your web guys putting rates in your shopping cart and on your e-commerce, and you've got the e-commerce team managing the products that are over there. You've got your controller who's putting together your returns. You've got your accountant that you call. So you're spreading the cost of compliance across your business. So it's a cost that you don't see. So when you think of the cost of automation, people think, oh, I could hire a person for that. Please don't think that. This is something that is spread thinly across many people in your organization. And that cost of automation is going to save you the risk. And it's going to take a piece of what all those people are doing and automate it and give all those people more time in their day. And it's something that people you can't see it on paper. Does that make sense, Carl? Nobody adds up the little bits that everybody does. And so don't be afraid of automation. Please into it and explore it for your business, because it's not as expensive as businesses perceive it to be, especially when they say, well, we don't charge any tax, right? Our customers, Carl. Well, we don't charge any, so why would we pay? This is more than we pay the government, but it's the risk. So take the time, get an nexus study, evaluate your business. Is it really sustainable? And take the time to explore automation. And I mean, explore it with everybody across your company. So.
Right. Well, very good. Maria, thank you so much. This has been really helpful. And I'm sure some great information for our listeners out there. All right.
There too. Thank you so much for having me, Carl. It's been fun.
All right. Thank you. See you next time on the Connected Enterprise.